Have you ever wondered why your profit targets on TQQQ seem to always fall short of expectations? QQQ, as you see, hits its profit target based on this past high, but check this out. TQQ falls way short, or did it? Maybe the problem is you're just starting your trade out on the wrong chart. This video is going to show you how I target shoot both my entries and my exits and provide an explanation of why there's this huge gap between expectations and reality on the leveraged ETF. We'll just call that the fear gap for right now. I start my planning over here on the non-leveraged ETF. I suggest that for everybody who wants to trade the leveraged ETFs. And what do I establish there? One, I establish what is my bias. In other words, do I have a bullish bias or a bearish bias? As you can see, my TSI is heading up, and right now my MACD weekly is looking very positive. So I know the direction I want to be trading. The next step I do is I want to identify a high probability action zone that is defined where I would like to get into the trade. If we roll back the clock just a little bit on the Qs, we see that we have a really nice breakout starting to happen here. We've moved back about those highs. And so what is my target? This is the end of the week, at the end of January 2023. So what I do is I look and say, where do I want to get in? Where is my high probability action zone? My high probability action zone is down here where the
10-week moving averages, which the 10-week moving average
equates to the 50-day moving average. But my zone isn't down here. That week is already done. I want to move up. So my zone is just a little box around that area right there. And what I have on my charts is I just have an extension here that extends my moving averages. I'll put a link down in the description to tell you where you can go on Thinkorswim to learn how to put in those extensions. I go to the high from Friday and say, well, I expect to move back down to that line. Well, how far is that? Now, this is where things get interesting. I grab it, I extend it down, and it gives me a number of around 7.96%. So let's just round that to 8%. So if prices on the Qs fall 8%, I want to be in the trade. However, can I just take that and transfer it over here to the TQQ? The answer to that is no, I can't. Well, but how far is that same line down here on TQQQ? Well, it shows that that's around 19%. So that would seem reasonable for it to get down that far. However, take 7.38, multiply it times 3, and that gives us another number, equal to 22%. So that tells me that that same equivalent level of my 10-day moving average over here on TQQQ should be down about 22%. Go from the high, now go down 22. And look, it overshoots that number. So let's go ahead and just draw a line in here at about right there. That's good enough. Again, I'm not after a precise number. I'm after a zone to put the order in. And the zone is what I call the high probability zone. So now I have another box I can draw in over here for TQQ. And let's say that little box is right about there. I can take the data from that particular box and start building out an order. I can say, well, if prices get down to somewhere between 11.11 and let's say 10.59, that's where I want to enter. I can put in a conditional order at that time, or I can move it up or down, but that's the box I want to buy in. Now, it doesn't guarantee me I'm going to get in the next week or the week after that, but that's where I have drawn my line in the sand to. That is my high probability zone. That's where I want to take action. So 3 weeks later, as you see, we fell, prices action did fall down into the little green box, which would have been over here. I was filled at that point. Of course, I put a stop loss. Have your file been falling down at a hard stop at 15%, but the projection is for it to move higher than that. And sure enough, over the next few weeks, price action continues to react. Got down about 10% from where I originally bought it, but it stayed within the 15% stop loss. And then it's starting to climb up the right side of this major cup here. We are moving in the right direction. Everything is in gear. But notice a couple of things. Is one, the dive below the 10-week moving average here on the TQQ is much deeper than, or appears to be deeper than it was over here on QQQ. However, I took, and this is a terrible pun, I took my clue from TQQ based on how far I expected it to drop there, and then simply multiplied it out by 3 times to give me my ballpark of where I expected prices to go. Okay, we're in the trade. We're watching it. We're going, oh boy, it's going to run all the way to 1969. It's actually a very good year. However, there's a problem. And the problem is that really the correct profit target for TQQQ, even though returning to that past high is the proper profit target for QQQ? Well, how do we determine an equivalent run for TQQ? I'm going to run through this really fast. Is TQQQ really moving at only 3 times the amount of the non-leveraged ETF? One of the things I've discovered over the time I've been trading the leveraged ETFs is oftentimes on the stronger ETFs, they will actually move more than the projected movement of the underlying. So to find out how much that is, I want to basically go over here back to the Qs, and let's take a recent move. The recent move, let's say from this low here to this high. Well, this low from this high up to that high is about 20.77%. What was the same move? Now, if we took that and multiplied it by 3, we would expect the move on TQQQ to be up about 63%. But how far did it really run? Well, it really actually ran 70%. So that tells us that it's actually running more than the 3%. How much is it on the nose? Well, it's about 3.4%. So every day it's moving about 3.4% up to the upside. And it may maintain that same ratio as it moves to the downside. Again, TQQQ is really a special case. Well, if I take that information and I go over here to this move here, how far does QQQ from that close have to go to get up to the potential profit target? And I show that up at about 9.6, 9.5%, somewhere around there. I would expect TQQQ to run up 28.5% from that point right there. So let's lay that in there. So about there to 1565. What are we doing? We're defining a potential profit zone. Now, if I take that same expected move from there, my expected move would be, again, let's say 28.5%. But in reality, I'm looking at a potential 3.4% move from here to here, which now gives me a secondary target or a zone for my target up here. But this time I want to go up 32%. I now have my zone where I expect prices to go. Note, I'm now already prepared for price actions on TQQQ not to make it to that past high. And guess what? That's okay, because you're a step ahead knowing this information, the equivalent move. Okay, the week of 5/15/2023, price actions do run up and hit our zone. And again, this is our high probability action zone for the exit. And if we were targeting this run back up here to this level on the Qs, and we would have exited using that to our exit, we would have hit our target and away it went. Now, when we first calculated this way back down here, we did have some clues that that was as far as it was going to get. The ones who would be disappointed are the ones who thought price actions were going to run all the way back up to that past high. So if one of your problems is not knowing where to act without freezing or guessing, then let's narrow that gap. Check out my book, Trade Your Way to Freedom. I'll put the link down in the description. And for a few of you, you may also want to check out the AutoPilot trading service to trade with the community traders that trade the AutoPilot trading system every week. So what about the gap? Like I said, I believe that this is, we can consider that the fear gap. And the reason there is this large gap is because of the volatility drag on the leveraged ETF, because they have to replace or match the existing return on the underlying on a daily basis. There are expenses that go with that that slightly modify the technicals on TQQQ. That's one of the reasons why I always suggest to people start over here on the technicals of the non-leveraged ETF. They're a pure picture of what's going on. This fear gap is something that, yes, we need to be aware of, but also recognize that the potential, not a promise, but the potential of what TQQ can do, if you've been following TQQ for any time, you know it's quite large. However, we have to keep ourselves contained within the rules that keep us within the parameters of the plan. If you want to know what those rules are, go ahead and check out the video that'll pop up here, and it'll walk you through exactly how I do both the entries and the exits and the full 6 pillars of AutoPilot trading.